Hello everyone. Um, it's been a while. Haven't done a video for about a month plus now. Apologize for that. It's just been busy. Focus on other things. Doing some coding, doing some system and stuff like that to support my business as a trader. So sorry about that. Apology. And for the member that just joined, welcome on board. The member that been here waiting for some updates. You should be able by now, just like to mention that, should be able by now by watching my videos, analyzing what I'm looking for, how I'm trying to analyze a chart. You should be able to do it by yourself. You should not be rely on someone. I don't mean, you should have a mentor, of course, but you have to have a backup always. You have to have a backup like your own analysis. You need to trust your own analysis by try and error, keep repeating, testing. You don't have to trade live, right? You have to kind of like have a plan, have a strategy, uh, write it down, put it in a spreadsheet, uh, all the stuff. You should not be to rely on someone else, only rely on yourself. Okay, it's very important. Because if I'm not here, if it's whoever you mentor online or your friend is not going to be always 100% available for you. Okay, you should be always available for yourself. You should have always yourself supporting your decision. Okay, like decision tree. It's like find out how to do that by yourself. Okay. Anyways, I'm gonna do in this video. Maybe this video will be longer. It was gonna be a long video. Um, So I'm going to talk about the market. I'm going to try to show you how I do trade short time frame and how I trade long time frames. Okay, um, there is two things. I'm really the more time you spend in the market, I mean years of trading, the more you learn. Okay, and maybe you're not going to take that on board, but that's the reality. That's if someone older than you giving you advice in age, or your brother, older brother, or your father, your mother, or member of family of the family, and sometimes you listen from here, from the right, take it on the left. You don't really take it on board. That's something normal because that's a human being. That's us. Like, oh, I don't believe that. I don't believe that. You doubt the advice. Okay, but I've been there. I've been there, and it is very important to take a small, at least 1% of the takeaway. Your takeaway should be at least 1% or a bit of information from every one try to give you an advice. If you don't do that, you will never improve. Okay, and it is very important to analyze this advice and try to take something out of it because the person is telling you that advice. He's telling you now, tomorrow maybe he's not going to be there to tell you the advice one more time. Because when you keep listening to hear the same advice, at some point you're going to get about 20% of this advice on board. Your subconscious mind starts to work it out. Okay, maybe this is a little bit confusing, but what I'm saying here in concept is, and just to filter all this out, when you watch someone doing some, especially in trading field, okay, try to understand why he's doing this, what that is going to help you, how that's going to help you, and all the stuff. It's very important. Okay, I watch so many people, I watch so many courses, so many indicators. It's really all come down to one thing: you. Okay, you and your mentality, your mindset, your plan, your time. How strong are you in this field, and how you practicing and how to improve yourself is all come down to this. Those are like all meters, you know. You 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 your dashboard of trading is like your how is your mindset? Are you upset? You're angry? You're avenging? Or you always think of something else? You're 50% thinking of something else. You're not thinking of the market. How focused are you to trade? You need all these meters. You need to be in a good level. Don't say 100% or 99. No, at least, of course, everyone trading and in the back of his mind think of something else. And 1 minute here, 3 minutes there. You need to always keep your trading only trading, and that's why I'm trading only for 2 to 3 hours a day maximum. Because if I do more than that, I'll be lying to myself because I will be thinking of something else, family issues, family business, stuff like that. Even think of something as friend, someone texts you, then your mind just went away from trading and talk to your friend, your girlfriend, your wife, your kids talking to you, take you away from trading. You have to have this time where not think of anything else, but focus on one thing, trading. Okay, that's what's gonna make the difference at the end of the month, so at the end of the trading period of 1 week or 1 day or 2 hours. Try it. Focus fully on trading for 1 hour, better than trading the 12 hours and you're not doing anything. Okay, I hope you get the point. So, uh, there is a two things. I'll be quickly about this. Two things about trading, guys, is that there are four port. I call it a port in trading or directions. You could trade forex, which is money. You can trade assets like stock. You can trade future contract, and you can trade options. Okay, there are four things you can do. Okay, you're better off do one at a time, or if you're capable of doing two, I reckon that you could do forex or future. Okay, that's one group, or you can do stock with option. So stock and option, you're hedging. Future, it's standalone system. You can trade future separately, or you can trade with option as well. But future is in daily basis. You cannot hold overnight because it's too expensive for individuals. Okay, for companies and high frequency trading, they have deep pocket and they have so much money they can hold for a month, a year, whatever they do. Okay, because they have enough money. But for you and I, we could only do per day, per 5 minute, per minute, and that's what future is. Forex you could hold, of course, because you're trading with a broker. So between you and the broker, you're making a business together. The middleman is there's no middleman basically. It's just the price. It's coming from the multiple banks, try to give you the average price, and that's how they deal with you. So broker is like between me and broker. There's no money going to the bank. There's no other party taking the money. If you lose or you win, you basically the broker giving you from his money, his pocket, okay? Because he agreed that since he opened a brokerage firm, he willing to pay the contract for different. So make a contract with a broker. By the end of that period of time, the price moved in a different direction. I decided to terminate the contract anytime. Okay, he cannot decide that for me. I decided when to exit positions. If I'm correct, I exit at a higher price, I make profit. Okay, if I go against me and I'm still in the trade, it's up to me. Really, it's a contract for different. I have a contract with a broker. Okay, broker, I'm gonna buy 1 lot or 2 lots of pound USD, right? He said, okay, the term and condition is you're going to pay a spread, you're going to pay commission if it's commission contract, okay, as it depends which account you open, and there is every day the swaps cost that kind of percentage every single day of how much you're taking on board. Okay, that's it. Really, it's quite simple. But if you know what to do, what you're doing, then you understand that's a contract. You can terminate it any time, right? Not the broker. The broker only can terminate the contract if you margin call or you don't have enough money to cover that contract expanding or going outside your limit, okay? And that's what Forex is. So Forex, you can trade it if you understand Forex long term, you can trade long term comfortably and everything is okay. Option is got time frame limit, so you can uh, buy or sell contract on options, and you limited by time. Okay, I'm not very deep in option, but I have the concept, the idea of the concept of the option is you could trade some level you think that is going to bounce from there or is going to go keep going down, then you option on it, and if it goes down and up and down and make a lot of noise, even it go outside your contract ability or your account ability, the time is will be limited by only amount of pips you're going to lose. Okay, if you say 50 pips is your limit, you already paid as a premium, then the price will drop maybe 200 point, and he's still in this contract. The reason being is a time based, is not a price based, not how much you're going to lose or how much you're going to win. If the price come back up at the same level you entered, maybe higher, maybe low, maybe even, you could still make money. Okay, you could still, okay, if it expired at the end of the month and bounce off and as you expected, then you're making money. The contract expired and the money, you're in the money, so you're not out the money. Out the money you lose your premium. In the money you make your premium with more money, depends how many pips you moved higher than your entry. So that's option. Obviously it's a little bit risky. The reason for option is people uh, hedging. Okay, you hedge your position of stock or any assets or forex. You basically have a big position long and you want to make sure that it's not going against you. Then you short it on a spread of 5 or 10%. That's, you want to secure that as a profit. Okay, and that's where you secure 10%, and that's most of hedge fund strategy. They buy big shares like Facebook, then after that they hedge it, short it against in case of crashing, and they go to option dealer broker and they short it. So they have a hedge between these two. No matter what happened to the market, they still have 10% or 5%, depends how much you calculate it. It will be in a profit in case of disaster. If they think it's keep going, they can exit one position and they cancel the other. They could make more or less or 10%. So most of hedge fund, they don't do millions or I mean, like, of course they do millions, but percentage wise they don't do that much, maybe 10% out of $1 billion. So it's a big money, still big money, but that's how they do it. Okay, they don't just go long and they keep holding forever. If you go against them, they cry or whatever, or they hedge by option. Okay, so for future, it's I reckon future you can stay long in future, but if you have enough money to hold overnight, that will be okay. But future is always in and out uh, deal. You cannot hold and hope for the best. Okay, you only see a pattern. That pattern only lasts a second or two, or 5 minutes, or a minute, or 15 minutes max. If you're gonna stay for an hour or two, you make sure that you have enough time to get in and get out. If you think it's gonna go higher, then you should be entering early at the day, not at the opening. At the opening, go a few hours left, and you'll be running out if you trade in a big time frame. And that's why I always do 1 minute to 5 minute max. I cannot stay longer than that. Okay, so that's what you can do in trading. Okay, that's stock. Of course, you buy, you hold overnight. You have no control over overnight. If stock crash or something, you basically out of control. You cannot exit your position. You have to wait for next day to open. And guess what? Open was a big gap. You have to pay the broker whoever left. So stock is preferable to be done as a future, in and out the same day. Don't hover overnight. Hold overnight. The only one you can hold overnight, which is about 50% of this equation, which is option, you can hold, of course, and forex. The other two you cannot hold overnight, is very dangerous or very expensive. You could make you poor very quickly. Stock and future. Okay, a lot said, so hopefully you will take some advice from what I said and see which one suit you, which one will suit your criteria. Like if you're full time like myself, you should find a way to deal with this, see which one suits you. Myself, I used to do Forex. I'm still doing Forex, but lightly now. I'm trying to translate from Forex to future full time, and that's why I'm doing some coding and some machine learning and stuff like that to automate some work on Forex. No promises, no anything like that for you guys, but I'm just saying that in the near future I'll be doing automated system on Forex. Uh, Maybe future as well, but I'm sticking with Forex for now to automate it to be automatic, not like a EA or all this stuff. No, no, there's something completely different. It's intelligent decision tree and stuff like that. Something to do with machine learning and reinforcement. And if you probably know about that, just like the bank hedge funds and they're using something similar to it. Not exact, but more or less is going to be similar. So I will be showing some more of this in the future, hopefully. So my channel is going to be included how to code, how to do this, and strategy testing and stuff like that. We'll see. Just I'm making this video today as just say hello and talk to you guys and share of the market analysis. But yeah, let's keep going. Okay, so I'm looking at the stock performance, which Finviz, very nice website. You can quickly have a look here and see what we're doing, how the market doing yesterday. Is nearly it's not dynamic here. Just show you the previous day. Weekly performance looks good. If you go back to the chart, I'll show you that's what we talked about last month. Of course, I'll talk about monthly basis now because last time I did the video was like a month ago. Here you go. S&P 500. Told you before that if you remember, I recall this. We were here somewhere, and I said that it's gonna keep doing a spike and come back down quickly. If you remember, if you recall my videos, this did exactly that because it was overpriced, and just to see that break below that one, 2 days, 3, 4, 5 days engulfed. Okay, I was expecting that momentum to come back down quickly, then sideways. So far we're doing sideways, but I still, well, since last night I didn't really see this is gonna go higher than that. I could be wrong, but remember that the election on the way, we just bounced off. Trump was talking about no stimulus. Forget about it after the election. So election is gonna be somewhere here. I don't know, November or yeah, somewhere here, about not long before the election and now. So yeah, I think that we're gonna see another leg down, then up, down, up. It start to go slowly. We're gonna go like slow. We're climbing up to that high, then probably we'll come back here and we'll drop from there again one more time. It's gonna call it rejection. You will say, okay, price been rejected here because it's just two tops. Okay, just remember that it's gonna do that sine wave situation until the election come in. Then the election will show a spike probably, then we'll come back down again. That's what I think is going to happen. Remember that market normally go up all the time, normally go up because there is a stock. So there's two factors coming in the way. There is election, I think it's November, and coronavirus. Okay, there's two factors is driving the market at the moment. Obviously, it was a coronavirus, which we did here, the V-shape recovery was Fed started buying, and I said that they're going to exit at some point. And what they're going to do, they exit some of the positions, not all, because the market is leveled by percentage. Okay, how much buying power, how much selling power, and that's where the market deciding where to go. Market always looking for liquidity to go to it like a magnet. So basically, when the Fed they buy, they have no take profit level. Sorry, no no take profit level. So they put the take profit, and as soon as we see this, we start selling. They did some, then after that they wait for it and sell again, and we hitting some resistance here, support. I call it here. Here you go, supported down there, down previously. We came above it, we consolidate a little bit, then we bounce off. coming back to it, test it one more time, will bounce back again. The question is it going to have a wave 1, 2, 3? Because that market moved on printed money, so that printed money they're going to be taking out the market, burn as a whole. Hopefully that's the case, or not another way of making money out of it. Anyways, I'm not going to talk about that here live, but I think that's what they're doing now. Come back here. There's a channel as well. Break out of the channel. We have a leg down, leg up. Let's see. You have to assume any high probability trade. Okay, so probably can come back hard. Let's see what's happening next week. Okay, let's just go back quickly here. Go to Forex. You see that dollar is weaker now, and New Zealand, all the stock assets that are up. Aussie, New Zealand is up. Pound right next to it. Swiss should be weaker next to euro, but remember next yen. But remember what happened is since the COVID-19, dollar is becoming the safe haven assets. So now we're gonna see. Well, now since January, we will see if a dollar on the right hand side, which is the weakest, we're gonna see Aussie on the other side as a stronger, because Aussie it's the currency for stock. If S&P 500 going up, then Aussie going up. Dollar used to be gold, yen, and yeah, used to be gold, yen, and Swiss, the safe haven. Euro now become a safe haven as a dollar because they're both are currencies, both are cash. Okay, and Europe and pound as well, but pound is not really acting. Pound acts as a standalone because of Brexit and all this mumbo jumbo going on. And my view about Brexit, I think maybe we're not gonna have a deal, and there's gonna be another extension. So they're gonna have some extra time. I think. I don't know. They said they can't do that anymore. I'm not sure where we're going from here. Is a dead end. We're gonna have one decision, and that decision is gonna be the wrong decision. So I don't know. That's what I think. Anyways, so I'm gonna go back to the chart quickly. I want to make this video short. Let's go to indices first. The index pound. You see that pound of a double bottom here. Nice. I'm coming back up. Discord, I did already post idea of pound in 4 hours, and that's where it worked for me. Then I exit, I re-enter, I exit. The last position was 130 yesterday. I exit that position, and I'm standby now, waiting for more momentum up. But I'm a little bit skeptic because of Brexit, so a little bit noise. So I better stay out of it for now. So far, we're above the 20, and we're holding. We kind of overbought territory here, but I don't really believe this indicator will help me. The only thing is going to help me two things: the candlestick and the behavior, who's in control, and where we are from the 20 moving average. That's all I'm really looking for. This is already included with the package, the free view, as is not my design. So keep in mind, it's not my design as a default view. So I'm only looking to the daily percentage between pound and the rest of the assets. Okay, the rest of the currencies. Um, Euro is basically consolidating. You see that as dollar index because it's against the dollar index as well. So Euro is a little bit consolidation. It's not really showing any momentum. It's hugging the 20 every time go away, come back to it. Every time go away from it, come back to it. So it's really not doing much. However, dollar index did exactly what I did talk about before. If you remember, I said that's gonna bounce up to this level above the 20, then it'll come back down again, because that was a pullback on a big time frame to do waves. Basically, that's what the market does. Every time getting away from the 20, it will try to, like a magnet, come back to it, because that's when, if someone's selling away from the 20, they exit their position, maybe 200 lots. Then when they get off the bounce of their positions, what happened is they bounce back up, the price bounce back up to 20, even higher a little bit. So where they enter the position. So when you see that a V shape, that means someone get off. Okay, it's like you bounced off. When you see something bounce very quickly, that means so much money came out of the asset. Imbalance. What does it mean? It's a balance. Okay, so someone jumped in the market. It showed that is actually he jumped to like a 200 contract, and the market was an average was like maybe 50 contract between the buyer and sellers. It's like they have an argument about the 50 contract, and someone come around, someone of course hedge fund or group of traders, they come in and they put more 200 to the equation. So you got 210 short and 50 long. Who's gonna win? Just as an example, okay? So see that bounce down quickly, and the 200 they just went out the money. They say they get out, and what happened is the market come back in bounce imbalance again. Then we have like almost a zero seller, and it's still 50 plus maybe another 100. They recognize that's a good price to buy. Then we'll have 150 buying power, maybe 10 or 20 that try to short it here for breakout. We have a failure. There's something called imbalance, and what happened in imbalance is the market realized that they have a more buyer than seller, and the buyer they put the position uh, uh, sell limit here as to exit the profit. And what happened is there is a magnet here, it's like a big magnet, maybe 200 contract to exit here, and the market down here. Market what happened is it start climbing, and the more the market go up, the more this price is that magnet is going to increase to maybe 200 to 2200 contract to exit here. So the market will quickly start to bounce back up to this level because that's liquidity provider. Okay, that's liquidity, that's position will fulfill all the rest of the positions. It's a little bit confusing to talk about all of this if you don't understand, but if you don't understand what that means, that is how the market does. Market is always looking for liquidity. If someone have a big position down here, for example, the market will magnetically coming back to it quickly. As you can see that I think there is some certain buying power here and here. Hedge funds and big player, if they have like 2,000 contract, they don't put it in one place. They basically trap trapping the market all the way down here. So the market as far as it goes down, the market bounce back up because they put most of their take profit up there. So the market come back down, get all this trap filled, and coming back up again now. And some trader they started selling here, and the providing liquidity for the market. Okay, to the market to go back up, hit that level, then market come back down again. It depends how you see the market can go to. Okay, a little bit confusing, but that's how the market does. So what I can see here, we have a very strong momentum down. That's to do with the news as well, plus of course algorithm trading computer. They jump in the market and they make the market. They make basically market makers. What the market maker is when they move in the market in certain direction, when they think it's the right direction, is a fair direction, and that's what that where they bid on. They put their money on that direction. All right. Yen coming back down as well. Strange to see both of them going down. That's changed since January. You know that the safe haven now is a dollar, not yen. Well, that can change anytime now. There's no rules. It's just discovery, correlation. That's how people find out that yen is a safe haven, and that's where it become a habit. But this habit changed since COVID-19. New Zealand's shown some rejection at this level. Well, I don't call it rejection. I call it a buy zone here. Since we come back down and come back up quickly, that's for a big bounce, something similar to this, a failure. If you remember my videos, you learn some from it. That's a failure here. That's we have to break here and we have successful breakout, then that's continuation. So if we have a successful breakout above this, then I expect another 2 to 3 legs up. Okay. Swiss similar to euro, but Swiss showing some more on the meter showing that is stronger than euro, but the reality is they are similar. I don't trade it really. I don't recommend you to trade it. It's up to you at the end of the day. You do your back testing on it. If you think Swiss is good for you, you should be my guest. You see that I like this 1 2 3 1 2 quick drop here. give you a chance to re-enter again Aussie. Of course, that's to do with the stock. If you trade in the stock, you trade in Aussie at the same time. I don't recommend that you trade both of them at the same time, because if one go down, you go down both. You have to have a hedge strategy in the play as well, in the place. Okay, CAD break higher on Friday was a surprising news, as everyone knows, about employment change. See that failure here? I like this failure. If you go to the low time frame, if you trade it against the weakest currencies, like you can have a dollar, yen, not a pound, euro. So you go these three currencies to trade against it. You see that I've been trending. Back then we have a break this anchor. We'll never test it again. We'll break this anchor here, and we're going for the third one, and we'll have some take profit taking place. Probably Henry resting here is a bit of one, is a two. I'm really gonna be looking for another one. So I think CAD will go higher. That will encourage oil to go higher too. Quickly, yeah, we'll talk about the COVID-19 later, but keep that in mind that COVID-19 is trending back up, and that's what happened here before. If you remember that, we talked about COVID, and market is still going up. We're above this level at the moment, so probably we'll see a drop. I don't know if we're gonna see that again. If this happen, it's not gonna happen the same time around. Remember, the Fed said they run out of bullet. They don't have other. There's no more strategies. They cannot keep printing money. It's gonna be all like a video game that said game over, reset the game. I don't know. So they cannot do much of it. If the market goes down, then maybe they can support a little bit, but not forever. So if you have a COVID and investors try to run away, that's imbalance. As you can see that when the investors start to run away and seller realize, okay, that's a good opportunity to short COVID, it was very clear for everyone to short it. Guess what? Why the market went down? Market could not find buyers until here. Okay, so from here people start selling, and some that exit position, all the green, because it's very clear signal, guys. It's like very clear. There's no buyers. Okay, now, whoever exit here, they are just artificial intelligence, like EAs. They have a limited ability to get in and out. Maybe I'm too late to talk about this move, but you can see that they buy and sell, the buy and sell, the buy and sell is like consolidation, but overall the slope of the trend is down. Okay, the big player, however, when they say, okay, that's fair enough, I like this price, is went far enough, and now we're buying. But not all of them. Obviously, the Fed as well stepped in, and that's give confidence to investors to jump to the back to the market. And the noise you see here, that's artificial intelligence, of course. EAs, they trying to buy and sell all day long. They don't take a break. They don't do coffee. They don't go see the wife or the kids or girlfriend. That's what they do for living. Buy and sell all the time. They're always above the price by a few pips, below the price by a few pips. Whoever hit first, they start to apply the strategy and keep going all day long. They do thousands and thousands of trade every single day. Okay, so they are have more strategy standby. Whatever fit their criteria, they get in, they get out, they get in, they get out. They make in market. Okay, that's what they do. It's not only one contract. They have tons of money, and that's what they do. The banks and hedge funds, that the one they move in the market. So the market was going down because there was no enough liquidity to keep the market stabilized, to push back up, and that's what happened when the Fed stepped in. They started buying with obviously unlimited money, and that's where the market are now. Investor realize that the market is pushing up because of the Fed. They take advantage of the situation, and that's why we are here now. Overpriced. There's nothing. There's nothing called overpriced or oversold. It depends on the situation of the market. That's when they say, okay, we're gonna support the market. I feel comfortable now, and I will put my money in this because I know they're gonna buy. Then me and another trillion of people, artificial intelligence, they're gonna buy with me, and that's where you get in. Okay, we break out of level. That's why the technical analysis come in play, and that's where you try to justify trade and you get in and get out. All right. So yeah, from here I see that we break out of this channel. We have a sideways. We break out of it. Let's see if that's gonna bounce off the next week. Another one before the election or at the election. It depends. Just try to be trader inside the day. Enough of S&B. Let's move on. Nasdaq is doing similar things. Very disappointed to see coming out of the channel sideways. However, we have a failure down here, couple days. We break out of it finally, that box. Consolidation. We get halfway and we supported as we did here before. Get halfway of the channel and we went down and quickly come back up sideways. I'll break out higher. Difference between these two, I have a full candle, this is a halfway candle. That's indication of strong momentum back up. I still like Nasdaq to continue up even higher than E-mini because like Apple and all these guys inside this index is pushing that price back up, and possibly Nasdaq was the leader on Friday, or most of the time Nasdaq is the one actually pushing the market up. So the way I trade on Nasdaq, for one of you guys that ask me how to use scalping, okay? Right, so quickly I will be reviewing how I do it on the 1 minute to 5 minutes. So I'm going to review the 5 minute first. I normally look at the 5 minute most of my time, and I start to draw lines similar to this, and this high and this low. Of course, I have to keep in mind the support and resistance and pivot points. That is very important. Market normally close to the pivot if it's not trending. If it started getting away from the pivot, it started trending. Okay, and then I'll be drawing lines like that. When I see that coming here, show me. Okay, let me just zoom in a little bit. Okay, remember that the market is always showing how to trade the market as scalper. Okay, if you want to scalp the market, you see where it's trending or not. This is high, penetrated by a few point, then bounce down. Okay, show you some rejection here. That's obviously the opening is going to be confusing until settle. Okay, getting some level like here. We see that R1 been rejected. We make a little bit higher than this one and we bounce down. Okay, that's mean like a failure. I'm looking for that lows. Okay, and this low, whether or not it's going to be supported. Okay, if it's going to be supported, then we'll see a wick here. Okay, the next time come around this level is good to buy. Okay, until I see new high. So I will be in here, for example, above the 20. I see this candle disappointed. This candle is disappointed. I could exit here or I can wait for it, because if I wanted to continue the momentum up, I think this momentum is going to go up. The reason being the previous day, that's the level of previous day, we made a new high, lower high, sorry, high low, high high, and we're still inside this high high. So that's my opportunity to buy here. Then we make a new high, okay? We make a low here. You see that is just go below it and hold it and bounce up. That's to do with a big time frame. If you in and out, the moment you leave your 20 moving average, you short it. Come near the 20 moving average, you short it again if he's giving you the signal to short. What is the signal? The signal is the previous day, the previous candle breaking low, give you pullback and give you a wick like this. So the trick here is 50% of the candle, 50-50 is a fight. The following candle show the seller take control. The following candle, okay. So what are we doing here from here? Okay, let me just give you the idea here. We come to the 20, we push it down, come back to the 20. If that want to continue up, it should go from here. Okay, high, high, higher, low. But what happened is keep going down. What's that telling you? Okay, looks like we have another leg down. We did another leg. Okay. If I hide this, okay, if I hide this level, okay, because that's what I'm looking for. That's what you see candlestick. Slowly going up after this bounce down, slowly going up in decision and did this, okay? From this candle, you see this candle, dodgy one? The following candle, if that's going back up, it should be green, okay? Big one. But guess what happened? It went down, okay? That's how I do it, okay? I look to the candle and I see the pattern and I say, okay, if that's the bounce and that's a pullback, I expect the following candle to go up. So my buy order above this candle, my sell order below this candle. Okay. If that candle goes down, then close down, that means it's going to continue down. That's exactly what happened here. In another scenario, I will show you. Okay, let's go back to another scenario. See that come back. Here we go. This scenario, for example, here. There's a 5 minute, remember. A pullback, and it should continue up. It did indeed continue up above this level. Okay, make a new high. Here we go. New high, new high, new high, new high, 5 minute. Give you pullbacks. Small pullback here, exhausted. You couldn't do more, and we'll break that high. Make a new lower, lower low, lower high, lower low, lower low, lower high, and so on and so forth. And that's how you scalp. I don't care about what happened yesterday. Only maybe I can highlight these levels for sub bounce levels. I don't care what happened last month. I don't care what's going to happen in the future. If I'm only try to catch the next couple highs, that will be my scalping. Okay. How to do it? As I said, you see that the bounce. If that's gonna continue, then we show you the candle is breaking above and continue. Give you another pullback retesting, and you expecting that to go up. If that go down and close and start to go down, there's no reason for you to stay in a trade. If you stop loss here, there's absolutely no reason. You exit your trade if you're trading only in a 5 minute and wait for better opportunity. Okay, and that's how you scalp. Okay, this one here, this one should go up. However, extended. Come where? Here. If I put a cursor, I give you that's a bigger time frame obviously. If you go 1 15 minute higher, if you're trading a 15 minute, a big bounce here. If you're only trading the 15 minute, you buy above the previous candle, above the previous candle. If it doesn't work here, you see that candle going red, you push it above it. That's another strategy, but that's how you do it. You only targeting the high, 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 low. By vision, by looking to the candlestick. If that goes down, for example, this one, if that's going down, it should do that. However, it didn't do that. It show you a big green candle. That's what the indication of that's a bounce. Okay, why do I have a green candle here? We look left, okay. We didn't really break this low. We break that high of the previous candle with a big push, exhausted move, and the follow up was great to continue up. What happened is if you miss this one, you wait for next opportunity. Here you go. Buy. Now you know. Now you know that 20 it's supported here. Okay, you don't have to buy exactly. That's it's kind of like okay, it's not gonna work that way. That's what you see after fact. Okay, but your 20 is always there. Okay, here we go. 20 again. Here we go. So that's why I'm using the 20 as my buy and selling point. Regardless, if it's going up, I miss the train, I don't care. Okay, here you go. We lifted the 20, come back to the 20, break above the 20, retest the 20, and bounce. Retest the 20 one more time, but this one deep one, but this one for a reason was in news, I think, and bounce of it. Okay, and that's how you do uh, future trading. And for 1 minute, 5 minute, 1 minute is even give you some more details, but it's a little bit noise. But it's good for the best practice. If you want to be good at price action, you should practice on demo on 1 minute, but not forex. As I said, forex I have a spread. Future doesn't have a spread. You're paying commission fees. You're paying fees basically, and the spread is only one tick, like the very next price, available price. Okay, it's not like a big huge one, just one tick, and that's why I prefer future than forex. Because if I need to exit in and out quickly, I know how much I'll pay in advance. Is not changeable like forex. I keep changing the spread the way they like it. So here you go, guys. This is very easy. Here you can see that if you only hugging 20, make a new high here. The first pullback near the 20, you buy, you stop loss below there, and you see that is making new highs. Come back to the 20 supported, bounce off a little bit again. Come back to the 20 supported, The 20, it's in the way of 50% anyway from the move. If you notice, if you take all this, almost 20, 50%, almost 50%. But the more to give you pullback, it's not like a full dead. No, it just give you like sideways. You see that sideways here, right? This is bounce quickly. There was a lot of money here to be filled and bounce up and so on and so forth. Okay, that's sideways here. The reason being is like a wave. Okay, the 1 minute first, the 5 minute, then 15, then 1 hour, then 4 hour, then the daily, then reset the count, then 1 minute, 5 minute. If that trending up, that's what it's gonna do. At the same point here, if I'm looking at here, 5 minute, 15 minute, test it once, test it again and bounce. 30 minute here, test it here, nearby and bounce off it. Come near it and bounce off it. See that? That's the market does that. If you trade in 1 hour only, if I'm looking 1 hour only, I see that the 20 moving average is supported here. I'm still in a trade. Obviously, if I be long from here and I'm holding, watching the 20, come near the 20, it's supported. Okay, I'm still in a trade. Come near the 20 again, I can add more. Okay, we're breaking higher. Okay, I'm in, and it's getting away from the 20. That's the 1 hour. Okay, imagine the investor, you're looking 4 hours. Okay, 4 hours. Look at that 4 hours. The the last time I was on the 20, break out of the 20, retest it and bounce off. If you only trading on 20, bounce, stop loss below that candle. Okay, all right. I would say okay, just make it realistic. After this bounce down, come back up. That when Trump said I don't want to do some stimulus package until the election, then bounce back up, issued from the 20, goes down, continue. Because this is what I'm expecting. Okay, no stimulus, blah blah blah. But the technical giving you different view. Technical break above it, come back, retest it. Okay, more than 50% of this candle been fulfilled were 4 candles. Come back down to the 20. Right now you see that green candles. You want to buy, okay, but you don't want to buy too high. You will be like, oh, I'm too high. If it doesn't go there, my stop loss is too far. I could only see what's next move is going to be. If you only trade in 4 hour, you could buy order here. You stop loss below this one because the reason being, if this is going up, coming back down, and if the 20 supported, then you're in a trade and you're in a safe place. If the 20 didn't support it and it goes down here, you're out of the market before continuation down. If you're wrong, okay. But if you short, there's no any reason to be short. Maybe some short came here and disappointed by the following candle and they exit already their position because they're probably above the 20. Above the 20 is a buy, below the 20 is a sell. So you see that if you trading from here, you stop loss here, you're not disappointed at all. You're disappointed only by so many consolidation here of the news. You could move your stop loss here in case. Okay, you're already in the money. You move your stop loss here or break even. It's up to your strategy. From the breakout of yesterday, you see that you could put your stop loss here, remove it here, and you go comfortably, have a nice profit in case of any go south from here to there. But the market is there. It's up to you really. If you want to be exiting your position, it's up to you. But my point is, your strategy is to do with your back testing. If that's the 20 moving average work with you, back test it. I'm talking about 4 hours is a lot of time. Okay. But obviously I don't do that. I do 5 minute. 4 hours is too long. But I don't ignore it. However, I'm watching it closely as well, as much as a 5 minute. I have so many charts open in each time frame, but the most one I trade on is the 5 minute and 1 minute to give me a heads up where we're going. Failure, strong momentum, retesting, hold the 20, wick 2, 3, 4 times holding on a 5 minute, bounce of it, and the next high. Okay, right. I hope that explain between the highs and the low time frame, the scalping and the long term. Gold, quickly to gold. See that gold that I talked about, this measure move is very tight, measure move. However, we just broke it and have a failure. Guys, someone told me that in comment, said that whatever he said, it didn't work out. Look, I'm just a human like you. Even the best computer cannot predict the future properly. There's so many variables. There is tons of buyers and sellers out there that randomly or by design, they buy and sell at the same time. Okay, so if I say that, okay, possibly a second leg down to this level is important level, looks good, and that's where the market bounce and market normally do measure move most of the time. We're still inside this channel. Okay, we're trying to go, we go slowly, slowly. The moment we come to the top of the channel and go really hard, okay, and bounce slowly, slowly and push hard again. Looks like the seller are out of steam. We have a failure coming back above the channel, stronger momentum, but still, we're still inside the channel. We break out the channel, come back down, and we start trending back up. Then I will say, okay, this idea maybe is not going to work. It was almost in the play by going down. But remember, guys, the market is got this emotion. If it's going down quick like this one, bounce up quick, come back down quick, and start sideways, that's it. Your idea could be invalid afterward. But you see that we start to consolidate here and we start to expanding our range, expanding, coming back here, come back down, come back up, but was not strong enough to come up over here and give you double top or have override it and come back up is still not really the case since we still have possibility of going down because we have a target. Okay, and that target maybe is not enough seller want to support it yet. But as long as the market see that, we start kind of like waving up. We're above the 20 now. By strong, we make a high, low, lower high, and we close the candle at the highs. Okay, so we close outside this high, indication of maybe buying power coming in and play. Let's see. Since we hit this target, we kind of waving now, we're feeding away, and we're trying to come back up. Let's see if that's going to be the play, or it's just still inside this channel. Okay, there is a channel here. Let me draw that properly. Between these two, let's say just right there, is not by the pip. Of course, there is minus and plus between every broker, but just try to get the zone of the price. So if I make a copy of this, put it down here, no, around this level is perfect. That's what our channel. We have a channel started here, consolidation, and everyone saw that's the channel sideways. It didn't really continue and start feeding away down. See that bounce from here. Let's see if it's going to be ABC, head and shoulder, and we'll continue down to the bottom of the channel. Everything possible. Gold, it doesn't move strong like wave places is moving in sentiment. It does move when not indication of weakness or safe haven, but it doesn't really act as a safe haven at the moment because when S&P 500 going down, gold was going down with it as well because some people say there's overpriced, some people say there is because it's not anymore safe haven. Dollar is actually taking the safe haven now because we have something else in the market moving up against stock going down, and that's an indication of safe haven, okay, which is the cash. Everyone was cashing out. Okay, moving on quickly. Silver is the same, is following gold, not exactly, but almost correlated with it positively, or negative one to one. That's Bitcoin. If you remember that I recalled, guys, this Bitcoin was going to break out of the range, coming back down, a strong dollar index. I will come back to dollar index, but anyway, we break our level, we come to it, we see there's a lot of rejection here, bounce off, give you another leg, and now we're above this. So let's see if it's going to be successful or it's going to be just sideways for the rest of the year. I don't think that's going to go. It's not a safe haven. It's a risk asset. So yeah, Bitcoin is a risk asset. It's not safe haven, as everyone was thinking that it's going to be like gold. It's not, and it's too expensive to buy. Here you go. Oil. You see that oil, we talked about it as well, is lack of buying really. There is no, maybe the buying was just around this level. I did talk about that level many times before. It's going to break below it, test it and go down and sideways from there. There is no really buying or selling a level. The only thing you can do, trade in the range. We have a range now that's in a sell position. If we come halfway and we support it, then you know what to do, either up or down. Wait for it to come down near the 20, then from there we will see in the low time frame where we want to go. I don't trade it myself, but that's what it looks like for me. Sideways, we lifted that small range, we make a bigger range now. There's some volatility going on. Dollar index, if you recall that, I said that is going to be supported. We're going to have a quick bounce, a quick wick down here, show rejection. Then we will be hitting that level. Here we go. If you recall that, here we go. I did put it in a line here. And whoever told me that is not doing what he think he's doing. The chart is going to only tell you what the market wants to do, not me. Market possibly was going to come to this level, and that's why I highlighted before, and he hit it, and it's coming back down now. We could see more move down, but remember the election coming away. You got the 90.92. It's the next level. Then maybe we'll see sideways until the election. To be honest, the election stock market could crash in election. Not crash, but it's gonna go down. It's not like remember this year we have an election, we have a COVID, so there's two factors in the market. Right. Euro. See that holding it. I was talking about euro to be 125. If dollar index go down, obviously, then we're gonna see that. So we have some. I think we'll have the election next year, French election. So let's see. Let's see what you want to do. Remember that if you trade in purely euro, you probably have more knowledge or information of the fundamental more than me. But if you trade euro properly and you want to know more, you should find out what's coming in 2021, what COVID caused impact on stimulus packaging and all the stuff. You should follow euro purely if you only trade in euro. Okay. So what I see here, we break out of the range, bounce back up. We're making high lows inside the low time frame. If you go 4 hour, it looks showing some trending back up from the dead, coming back from the dead here. Let me hide this away. Okay, it's like we've leveled here. We have a failure, and we start breaking high. I give you another test here to get in the market, and here we go. Sideways, break out of sideways. We start to level up. Another sideways. We break above here. See that if you only highlight these levels and start buying from there, if you're wrong, you just get hit here. If you're right, you hit here, you know. If you think that's going up, it's going up, it's trending above the 20 and holding. Easy said than done. Okay, I understand. Everyone say, okay, it's easy to say that, but when you are actually inside this 1 hour and 5 minutes, you're completely blinded by the fear and greed. But you have to always take this outside your brain. Try to focus on what the candlestick does. Try predict what's going to happen next. If that's so, we're going to see it from here. I will see some indication of that's going to do this. If it's not, then we'll go that way. Okay, and draw it on your chart. Write it down. Record it by voice. Whatever the way you want to remember this, you should do it because it's very important. Okay. Moving on. This video has been 1 hour now. Pound. I remember that I posted on the Discord for 4 hours. There you go. It was here, and I hit the channel. It was a channel. I said I'm exiting out top of the channel. Come back down. I found a support 127, and I brought it again, and I exit 130 2 days ago. Then I want to come back again here and show me that wicks I brought here, and I exit 130 again. 135 5 something. Don't remember exactly, but at this candle here. When I break this and I close here, I exit. I didn't want to wait for the next 4 hours. I closed the Friday early. So anyways, it's going up, and the way you see it on one day. So I think it's going to continue up 135 one more time. Okay. Same as goes your bound yen. All bound pairs is going to be moving the same. You see that if you see these two almost similar, indication of bound itself is actually strong. Here as well, bound Aussie is not very clear because, as I said, you remember if I talked about this, it's going to be sideways for a while. I'm not convinced. It's very small range. It's not really breaking new ground. Guess what will happen next? Come back down, up, still ranging. In my view, that if you trade in long term, you should go higher time frame. I'll look down or look up in the weekly and see what we're doing here. We basically will break here, we'll have a failure, and we just touch that high, for example, and went down big, come back up. That's weekly. It's very small, but it looks like it's supported on a weekly. If we go back to the daily, where we are from the 20, we are close above the 20. That's a good indication. Maybe we're going to have another leg down and come back up, or we're going to have a leg, we're close below it, the following test to the 20, then we will take it down. If that's true, then you get in short. If it's not true, then you get long. That possibility is you're right or wrong or sideways. Of course, you have to watch the stock bound New Zealand as well. It will have a nice bounce up against New Zealand, come back down quickly, give you 1, 2, 3, big one, another test. Looks like we supported here 50%. From this high from this low to this high around here we were supported. However, we didn't really break a new ground. We had a failure here, supported the 20. Then if we're still inside this level, inside this candle and this candle, then we sideways. We started breaking new ground, then expectation up, start to go below it, then expectation down. The next time we'll come around here is going to break it and continue down. Okay, we test it once, twice, 3, 4 times. I believe that fifth time is going to break it. It's not going to find any more support. Then they will move on to the next level. It could be somewhere here. Okay, the next area to support it or to buy it from. Remember, the market go to the is like a magnet. Go to the liquidity. If it's a lot of buying here, orders waiting down here, the market will come down to it. Not too far from it. Like if you come 50%, obviously the people that put in the big amount here, they don't put it randomly. No, they analyze the market properly and they know where to buy, where to sell. Okay, the moment come back down here, start to bounce, say 50% is a good level to exit. If I'm long, if I want to short it, that's the best place to short it from, and that's where it's going to go from. Okay, that's a bound CAD. Despite CAD was strong, bound is actually was overridden CAD up momentum. So let's see. I'm not really convinced. It's too choppy, too sideways here. It's not very clear to me. Bound Swiss, same. We hold the 50%. See that Swiss moved. Bound was weak, come back, and looks like it's gonna be 50% supported. Still sideways. I don't like Swiss itself, so I pass this one. Tesla, I was looking at this stuff, and that's it. Okay, guys, thanks very much for being here, and I hope you learned something from today. Obviously, I'm gonna say that if you're new to the channel and uh, uh, if you're new or you're there, you watch me, you like this, comment, subscribe, leave a comment, of course, commented, and I hope you learned something from today. And I'm sorry I haven't been there more active in the channel. Join the Discord, and hopefully you find a good community to talk to, and myself as well. Okay, thanks very much, guys, and you have a great day, weekend, and good luck for next week trading. Take care. Thanks. Bye.